Hello everyone and welcome to this webinar on trading strategies, some of the trading strategies which actually work, or 3 essential strategies at least. I've developed these over a number of years using not just my own experiences but also those of other traders and best practice. So I think you're going to find them very useful indeed. It's very focused, very much to the point in terms of what you need to do. I'm going to start off with the website, alpeshpatel.com. You can register here for free if you haven't already. That will give you access to a lot of free FX videos and also FX webinars as well. That's the good news. Let's move on. Let's just kick straight on. You can also, by the way, on that website, get access to all the free upcoming webinars that I've got. Now, what are we going to talk about? Well, we're going to talk about why we want a strategy. It might seem obvious, but let me cover it anyway. The next thing we'll talk about is what strategy, which are the 3 that I think work, and what in fact does work, and why. And then I'm going to tell you something which I think is the real secret to trading success, and I'm going to spell it out exactly what it is, and what I happen to know leading hedge fund managers use and we private investors often don't know about and we can use. And that the final piece in the puzzle, which is actually far more important than trading strategies. So that's what I'm going to close with. Now, first of all, I always start all the presentations with the risk warning. These risk warnings are actually very important. Sometimes I talk about trading positions. I may actually have them the next morning or a week from now, or I might not. I don't know what I might be trading from day to day necessarily, but I put this in advance just in case. I mean, not that I can move the dollar sterling rate by simply talking about it on a webinar, but still it's good practice to mention that. I'd also mention this is informational. It's not financial advice because I don't know the personal circumstances of everybody online. So I couldn't say to you, yes, you should go long the dollar or short sterling or so on and so forth. I'm giving you information the way a journalist would and not the way a financial advisor would, who sits down and looks at your personal risk profile. The other thing I want to get across, we might talk about spread betting, we might not. We might talk about foreign exchange. These are leveraged margin products. These are incredibly risky if you don't know what you're doing. They might not be suitable for everybody. I know people always gloss over these warnings, but I can assure you that they are important. They do exist, and just ask anybody who's lost a lot of money in a very short space of time, and they will tell you that. And you never hear about those people. You always hear about the people with the so-called island in the seas. But I'm being very simple when I say both with foreign exchange trading and spread betting. In fact, I'll tell you how important this notice is. 90% of private investors lose. There you go. That's not something you expected to hear. 90% of private investors lose. Of course, one of the reasons we're doing this webinar is to make sure you're not in that 90%. And how do we improve the odds of being in the winning percent? The good news is I think there is a lot we can do. The reason 90% lose, other than not listening to my webinars, the reason 90% lose is because they do a lot of very simple things that professionals do right. And that's why I'm giving these free webinars, because I've seen it over the last, 13 years since I first started speaking about investing to people. I always give a bit of my background, just in case you're wondering, oh my God, who am I listening to and why am I listening to him? This was me in the Financial Times, where I had to pick the value of the FTSE 100 over a 12-month period. I got within 0.% of the final value. I came top of all the winners. There's some names you might recognize, you'll have come across, and so on. Over here, Peter Temple, and so on. And John Lee, of course, the portfolio man. Sorry, John, you were about 500 points away. Anyway, so we'll learn some of my credentials and track record that the financial has monitored, as well from these good people, amongst others, about my background. But that's enough about my credentials. These, by the way, are all past and present paying customers of my company, TraderMind, and they've all paid to have my consultancy, whether it's about business development or customer acquisition strategy or whatever else it might be. They're not all listed there. There's actually E-Trade is missing for a start, for instance, and so on. I've written some 16-odd books. 13 have been published. The last 3 manuscripts are with the publishers being edited as we speak. So I think most of them being published by the Financial Times. So I'd like to think I've got some credentials. So let's get on with the serious stuff. What's it about? Why do we want a strategy? Well, one reason we want a strategy is to avoid it being like this. Trading for most people is exactly like this. You see a price rise, it might be euro, dollar, it could be stocks, could be anything. And first of all, as it rises, you get a bit suspicious, then cautious, you start getting confident. Private investors do this. They buy up here where there's enthusiasm, and they sell down here when there is panic. Just how it works for them, time and time and time again. It's how they end up getting it wrong. And that's what a strategy is supposed to avoid us doing. That's one of the key reasons. This is obvious to a lot of you because you've been through it. But I just want to start off with some of that. He says, trying to move forward with his slide. There we go. 90% of private investors lose. Sorry, but it is. We've seen the data. Not only do they lose, I thought I'd better explain to you that, I say 90%, I'm not saying they're stupid. What I am saying is we shouldn't feel too bad if we're in that 90% initially. We will look to get out of that 9%. So, moving forward, what then will help us do that? I'm going to just very quickly, a lot of you will be familiar with bar charts, but in case you're not, I'm just going to mention this very, very briefly because I keep on referring to it. A bar chart is simply this. This could represent one day or it could represent a minute, whatever our setting is, and this, the high point is the high of the day or minute or hour or whatever it is, and that's the low. The bar is where the price closed, and the little horizontal bar going from left to right coming into that vertical bar is where it opened. Okay, very straightforward. High, low, that's the close, that's the open here, and that's close there. So just in case you weren't familiar with, don't worry about key reversals and uptrends and downtrends for now. I'll come to that, but I just wanted to show you what a bar actually looks like. So where does that take us in terms of actual trading strategies and what it is that we're trying to do, what it is that we're trying to do? I want you to imagine, first of all, don't worry too much about how bad we might start off. We're going to improve. A lot of people do get quite pessimistic about the fact that trading is difficult. It's a very difficult thing to do. We're going to avoid trying to enjoy doing it too poorly. What we're going to do is try and do it well. So I do want you to take heart in that. I want you to imagine something, first of all. I want you to imagine that prices are random. There's a 50% chance they'll go up. There's a 50% chance they will go down any given second, minute, or hour of the day. Just assume they're random. So even minute by minute, 50% chance of going either way. Now, what happens if you place trades which said that if, for instance, dollar sterling or Apple stock, let's say Apple stock because it's easier to picture than currency for a second. If it goes up 20%, you'll exit. So you say, right, goes up 20%, I'll exit at a profit. If it goes down 15%, I'll exit at a loss. Would you overall, across 20 trades, if you've got a $10,000 account, would you make a profit? If prices are completely random, would you make a profit? Well, I'd assume if they're completely random, you'll have 10 profitable trades out of 20 and you'll have 10 losing trades out of 20. We can agree that. Let's say every trade you bet just $1,000 of your $10,000. So you're not even betting the whole house. You're just betting $10,000. Then you're going to make 10 profitable trades and 20 on those at $1,000 each, and that means a $2,000 profit. You're going to make 10 losing trades, lose $15% on each. That means $1,500 loss. Overall, across 20 trades, you should make a $500 profit. That is a 5% return. And if you were to place those trades, let's say in a week, then that's 5% in a week, and you do the maths and you think to yourself, oh my God, I could be making 250% or more per annum. And all you did was you didn't even have a decent strategy, because all your strategy was goes up 50% time, goes down 50% time. So if it goes up 20%, I'll exit at a profit, goes down 15%, I'll exit at a loss. Yeah, seems like a fair strategy. I'm afraid not. Doesn't work. We need to understand why it doesn't work, because that educates us why we have trading strategies. Doesn't work because what will actually happen in reality is you'll probably end up having 12 losing trades, which hit their 15%, and 8 winning trades, which hit their 20%. The reason is the 20% is obviously a little bit further than the 15%. And because it's a bit further, you'll get a few trades which get close, which will go up 15%, or even 16% or 17%, and then dawdle around and then fall back to a 15% loss. I'm going to start off with the website, alpeshpatel.com. You can register here for free if you haven't already. That will give you access to a lot of free FX